Ladies and gentlemen, I'm going to slap you in the face with some facts as we step back in time and compare the '08 financial crisis to the 2020 pandemic. We're going to be taking a look at the stock market. What were the best-selling products of the time? We're going to compare the interest rates, and on top of that, I even want to look at the criminal rates. So ladies and gentlemen, I look so forward to breaking this down for you. So let's jump right into this.
Drop it.
Welcome back, my passive income investors alike. And remember, folks, history does not repeat, it simply rhymes. And in light of that, I want to compare the 2020 pandemic crash to the 2008 financial crisis caused by the mortgage-backed securities. The '08 crash was considered the largest downturn since the Great Depression. But if we were to look at it on a scale compared to all the crashes going back to the 1970s, this current crash is the fastest one ever in history, considering it only took under a month for this thing to drop faster than any other crash. Mind you, we didn't hit bottoms we saw in 2007, but it's neat comparing all the different little intervals. But this isn't what I want to talk about. I want to get into the nitty-gritty details of comparing little things throughout society, starting with job loss. In 2009, they saw job losses equate to about 2.6 million, the highest levels in 6 decades.
2.6 million jobs were cut from the economy last year. That's the greatest decline since 1945.
Which was unbelievable at the time. But moving into the 2020 pandemic, and we've seen 6.6 million Americans filed for unemployment last week alone, which Thursday's figure add to some 10 million people that have already applied for unemployment insurance. This is an unprecedented time in history for something to cause this much unemployment compared to the '08 financial crisis. And how this is fully going to affect the markets and come into fruition as we're still in the midst of this market crash is going to be really fascinating. The next most fascinating thing I came across, this isn't like the most enlightening news, is that during the financial crisis in 2008, there was an increase that they found of about 5,000 suicides in Europe and in the US right after that crash happened. But in this crash, what we're seeing is an influx of domestic violence because everybody is stuck at home, paranoid, stressed to the nines, yelling and arguing with their family and their kids, whereas back then, people were just terrified. They lost hundreds of millions of dollars of people's retirements, and it caused a mass depression, leading to a higher suicide rate. The next thing is precious metals, which I have touched base on, but it's so fascinating to see how precious metals acted back in 2008, considering when the financial crisis started toward the end of 2007, gold almost doubled, going from $600 all the way up to almost $1,000 an ounce in such a tiny time frame, only to continue to go higher as fears kind of pushed up into 2012.
More me than my husband. Was nervous a few years back in 2010, and we bought some gold and silver.
And you're going to lose money because you bought it at the freaking top of the market.
Yes, we did. Both. It was horrible.
Yeah, so you're losing 50% of your money.
Yes, we are. The gist of it,
isn't gold a wonderful investment?
No.
Leading up till the 2020 crash, gold is pretty much unchanged. It has gone up $100 and it hasn't peaked the highs that it saw back in 2012. Now, comparing it to something like silver, we're in a whole nother realm here, guys, because in 2007, we saw a really similar increase in silver, going up from basically $12 an ounce all the way to $20 an ounce, almost doubling as well. But in the 2020 financial crisis, it's pretty bleak, in my opinion, to see silver take the drops that it has, getting nowhere near close to those 2011, 2012 highs similar to gold. Now, what does this say about precious metals? We're not necessarily heading into a severe financial disaster. Mind you, it could exceed into something because we're still in the midst of all of this. Nobody really knows the future here. But in the 2008 financial crisis, people thought the banks were going bankrupt. With all the banks filing pretty much for bankruptcy, seeing like the Lehman Brothers go under, people were terrified money was going to be worthless, so they were stacking up other assets. We're not really seeing banks going to be going bankrupt. A lot of individuals might be struggling, but I don't think it's not leading into the same stew-like situation, causing any kind of real increase in precious metals that is above normal. Leading into interest rates. So with interest rates being the most interesting topic, because people that are utilizing debt to basically pay their bills or try and cover their mortgages, back in 2008, there was not a real decline in interest rates. Actually, people increased the interest rate because the banks were going broke. There was a massive influx of basically defaulting on mortgages. I'm going to touch base on that in a second, but that was the 2008 2008 financial crisis, unchanged interest rates really for a while. Now going into 2020, considering there's no statistics on interest rates here, we can just look it up and we know living through this crisis that interest rates have dropped to almost zero. You can get debt today at like 2%. It's absolutely staggering to see.
Starters, they've lowered the Fed rate from what it was, which was 1 to 1.25, and it's been lowered down to 0 to 0.25.
From the mortgage-backed security crisis to the pandemic crisis we're having today, the government really wants to help people survive this until the economy can get back into a functioning state. So they're trying to give out loans, they're doing deferrals. So they're trying to make it easier for you not to lose your house, which we can see back in 2009. There was a record foreclosure rate that was up 81%. But taking a look here, they said that they are up 225% compared to 2006. Whereas today, the banks aren't trying to take your real estate. They're trying to get you to keep your real estate. So Bank of America, many banks are allowing basically payment deferrals, and people are getting livid by this because they're not actual payment deferrals. They're just saying, look, you can skip your next few month interest payments, but it's still going to get accrued and accumulate, and you're going to have to make up for it later down the road. So it's not like they're just handing people, free deferred interest payments on their mortgages, but they're definitely going out of their way to stop you from losing your house and definitely stop you from foreclosing, which is really fascinating considering back in 08, they would just take your house. They just wanted to get every asset they could and try and prevent the bank from falling under. But this is a whole nother realm of the bank trying to stop you from falling under. Now I want to talk about the most sold products in a financial crisis. Going back to 2007 and 2008, Hulu was one of the number one sold products, and Hulu is just like a streaming service considered to Netflix, and Netflix did pretty good through the 08 financial crisis. But the reason that I think Hulu made the top of the list because they launched in 2007 just before the entire market came down, which probably led a lot of interest considering all those unemployed people sitting at home with nothing to do. They obviously wanted to stream some entertainment. Whereas we skip to 2020, what's the most sold product? If this wasn't apparent enough when you're walking around the street seeing people with those masks on, well, you don't have to look much farther, guys. We're talking about sanitization. If this isn't the biggest difference in product sales comparing these crashes, I don't know what is, considering I don't think anyone could have predicted that face masks and hand sanitizer would be the number one sold product probably throughout 2020. We're not talking about fidget spinners, none of those viral things, just face masks. Absolutely incredibly weird, even though we know we're going to see an influx as well, probably on Hulu, along with Netflix and Disney and Apple streaming services. Those are probably going to do very well through this crisis as well, but this was probably going to be the number one sold product of 2020. Leading me into the last thing I want to touch base on here, guys, which is probably going to be one of the saddest comparisons over these two crises. And during this pandemic, you have to stay away from people. And unfortunately, if you have family members that aren't ill just because of the virus, but have other illnesses and are going to probably be passing away sometime in the near term, it is so unbelievably sad because there's no hugging. There's no really going near these people because obviously you don't want to get anybody else sick, especially in their dire need. And it makes it unbelievably sad to have to say goodbye to a loved one on the other side of basically a door because you can't really just go and interject your life with them. And yesterday I posted a video. It didn't do too well. I felt bad about the quality of it, but unfortunately I had to pre-make that one just because I had to go and deal with some family issues, guys. And I have to say, it was probably one of the most heartbreaking things I ever went through when my aunt asked me for a hug and I couldn't even walk in really inside of the house. So, I mean, I was glad that we were able to show up. We kept social distancing, as you can see on the porch here, guys. We were all standing apart because some of my family is frontline workers and they don't want to get anybody else sick either. So we're all kind of spread out watching, just trying to send my aunt as much love as possible. But this hands down has to be one of the saddest parts of this entire thing of just keeping socially distanced. I haven't even seen my girlfriend in over a month and a half now, guys, and we're just waiting for this to patiently pass. Unlike the 08 financial crisis where you could go out, hang out with your friends, go to the bar, do whatever you do on a weekly basis, this is a whole nother realm of just sit at home and let's really hope this passes. Like I said, guys, we're still in the midst of all this. Tomorrow, I'm going to break down my six-figure stock portfolio because it's been all over the board lately and I have a lot I want to go over with that. So consider slapping a like and subscribing just to catch that tomorrow, guys. But I don't know what else to say other than let me know in that comment section below. What do you think about these comparisons? Is there anything that I missed that you can comment on? If if you lived through the '08 crisis. To keep this in perspective, I was 16 years old when the 2008 crash happened, and I was so ignorant back then, I wasn't even aware it was going on. In fact, I just started my business that I'm still doing today, being a full-time magician, when I was 16 years old. Be a little different if I had to start that business today, I'll tell you that much. But I hope you guys enjoy this video. Stay cool, stay awesome, and I look so forward to chatting to you tomorrow.